hello and welcome on this surprisingly sunny Tuesday afternoon to another episode of Daily Market Mastery with me, Christian Rauchenwald. As always, before we jump into the market, let's get the usual disclaimer out of the way first real quick. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I always recommend, if you haven't done so, is go and check out the Elliott Wave principle, that or which you can read online for free when you use the link in the description down below. Now, besides that, obviously don't forget, like, subscribe, and enable notifications. And with that, we can jump into the markets. We see we have a slightly break-even start into the day. However, yesterday actually we had a quite positive day thanks to an increase in GameStop. We can see that we reached 24.08 per share. That obviously increased our portfolio's value. However, our covered calls are therefore at a theoretical negative value, because obviously if we would want to close them out now, it would be more expensive than it was, or then it would cost more than what we paid for them. Now that doesn't matter. The only thing that means is basically if GameStop manages to finish above $30 by the end of the week, then we would get 500 shares called away at $30 per share, which is exactly the strike price we got them assigned at. And if GameStop stays below $30, we still have our shares, but depending on the movement for the rest of the week, we might have a bigger chance to collect a little bit more premium for next Friday. As we can see right now, we don't have value because markets are not open yet for a couple of minutes. But once the markets open, we would see the premium here and to already have an idea of like what to expect. Now that said, let's actually look into or onto the charts. We can see GameStop here, as I mentioned earlier, we are waiting for a break actually of the 25-24 high to confirm that indeed the correction finished here, or for a push further down to confirm that the correction is not over yet and that we are actually going to the $15.30, $15.54 area first. Now, obviously, with the relatively strong movement that we saw yesterday, one can assume that indeed the downwards movement might be over, especially since we broke this trend line here to the bottom, but then did not survive the retest. So basically we broke then again the trend line to the top. While we don't have 100% certainty yet, it stands to reason. I mean, this could still turn out as some kind of A, B, and then C pattern. So we still would have room for that before we go further down. It's nice to see some upwards movement, or especially some volatility, because again, it increases the option premiums. We can just hope that the volatility lasts a little bit till the end of the week. And ideally, so perfect scenario for us would be a finish slightly below $30, which would mean strong upwards movement. I'm not saying that this is a likely scenario. I'm just saying that would be the dream scenario for us, to finish slightly below $30 so that on Friday we can close out our existing call options and write new call options for next week. Although if we get too close on Friday, so actually let me revise that statement. So our ideal case would be to still be a reasonable amount away from the $30 price, to make sure that our $30 strikes can be closed out for only $1 per option, or maybe $2 per option. So we actually realize a profit on this week's options writing, and while on the other hand still increasing the premium of how much we can charge for next week's $30 strike price. Now, if we break the 25-24, we might also sell calls at a higher strike price depending on what happens. And again, there's still the unlikely but not impossible scenario that we actually finish above 30, and in which case the shares would anyway get called away and we would just hold a pile of cash and start writing put options again. For then higher premiums, so because or depending on how high we would go and where we would be willing to write the put options. Now that said, that's about GameStop. So interesting movement yesterday. From the looks of it, that appeared more to be the start of the further downward movement, but then we got that upwards push here. So right now, I think we're leaning more towards the correction is actually over here, and this is the slow development of the next 5-wave impulse movement upwards. However, again, it's possible that I'm wrong. It's possible, or not that I'm wrong. It's possible that the alternative labeling that we also have to consider still comes true, and only once we break the 25, 24, in my opinion, will we have some additional certainty that indeed this is the next upwards move and the correction is finished here. Now, with that, we can move on to Barnes & Noble Education. After the original upward move that we, in quotes, predicted, so the turnaround area that we predicted here was quite accurate. We are currently seeing a little bit less upwards pressure. It's possible that we're currently correcting this movement, as I mentioned before. However, there should still be further upward movement coming afterwards. And it's also still possible that this entire movement here is not finished yet and gives us a little bit more room upwards. Now, I've covered more about that, I think, in yesterday's episode as well. So you can check out yesterday's episode if you want to know more details about that. Because for today, we are moving on, and we are, what's next on the list? Next on the list would be immersion. Immersion now, what was the high here at 912, and here we reached 9, and so we already broke the 889, which yesterday when we checked, we only reached 887 or so at some point. So we can be relatively certain that here indeed also we finished a corrective movement down here. Considering everything, I would say chances are good that from here we're now slowly but steadily are going to develop the next 5-wave impulse upwards. So it's going to be interesting during the next couple of weeks. Intel should also show further upwards movement, considering that we potentially finished an ABC move like this. Didn't fully reach the maximum target that I would have expected, but we reached the minimum target and basically made a new low compared to this one, which means this here could be the next wave 1, 2, and we could right now be looking at the third wave. Potential interesting entry point if you have spare funds right now and are not tied up in other positions would be actually already this area here if we stay above this so-called base channel. Oh, base channel looks like this. So if we manage it again above that base channel, then this would be wave 1, 2, and here we would be in the progress of wave 3, which should usually be the strongest movement. So while right now jumping into it might be a little bit too soon, because we could also right now already have 5 waves up finished in one way or the other and be retracing this here, in which case there would be further downward movement possible, although also not a lot. So yeah, one might consider entering already here. Stop loss would need to be ideally at the low that we had here at 21.57. So there's not a lot of risk. However, it's hard at this point to predict the exact target areas. Although it should be worth the effort, unless we're still in a dragged out corrective pattern. So we didn't just have a 3-wave corrective pattern, but this is still part of the corrective pattern, in which case we still most likely shouldn't get to see another low, but you just move like a little bit up, sideways down, but it's hard to know the exact time frame. Moving on to costs, again, getting a little bit of an upwards push. Things are unchanged. We're waiting for a break of the 879 high that we had here. Once that happens, we have an additional point that points towards correction was over with the close to the 50% retracement. And this is indeed the beginning of the next upwards impulsive pattern. And moving on to NEO. NEO has a strong start and is now recovering. I mentioned it also in yesterday's episode, if I'm not mistaken, so check that one out if you want to know more. But from the looks of it, it's possible that the whole correction finishes here with almost exactly retracing 61.8%. But from the looks of it, I would expect that this is only one part of the retracement. We are getting our ABC move, and then we get our second part of the retracement. As I mentioned yesterday was the 28th, and we were talking about it around 3 p.m., so somewhere in that candle here. An entry yesterday wouldn't have been too bad, because even if that plays out as ABC, there would be a little bit more upside. An entry today might also not be too bad. Stop loss could theoretically be at the low that we had recently, under the assumption that the correction is finished here, we go up further, or it would need to be at the low that was back in August, on the 28th of August, to also accommodate a potential further corrective wave before we go further up. So I would not just yet bet my house on it. But again, like overall, there's a decent chance that the correction finished here. The most or the most prominent indicator for that would be that we really got close, very close to the 61.8 retracement level, which marks one of the common areas of retracement that we see in corrective patterns. Moving on, Novavax moving sideways after the last drop that basically put a dent into our call options that expire in January. However, I mean, it still remains to be seen, as I mentioned, if we'll get another wave push down and reach the 61.8 retracement, or if the level that we reached here indeed is finally the end of the correction and not like I mistakenly assumed the original low that we had here. As for from a price perspective, obviously the low here and the recent low are not that much different, but obviously if like me, you got the call option, so your position here, then your positions are right now slightly underwater. And if we're talking about options with an expiration date, then obviously considering the time passed, the options right now are worth less than they were at the time when we bought them. Moving on, Nvidia having a slightly red day. As predicted. So yesterday we already pointed out, okay, it looks like we're getting an ABC pattern here. We reached the minimum target for wave C, but we would also expect wave C to make a new low below 137.46. So I would expect that we in this case potentially might even get to see the 134 area, or 133 to retrace at least 38.2% in this move. Now, confirmation for that in quotes would be once we break the 137.46, because then it stands to reason that we actually managed to reach the 38.2 retracement. No guarantees here, but that's just what it looks like right now. So again, like next couple of days, we're on an 8-hour chart, next couple of days, and maybe into next week, this might play out as 1, 2, 3, 4, 5, taking us down to 133, 134. And then from there, we would potentially get to see our next, using too much oxygen with all the talking. Yeah, thank you, sweetie. So from there, we would then potentially see the next 5 with impulse up. So if you don't have any position yet, then theoretically you could enter if we break the top here at 143.47, or you could wait for an entry down there in the area of 133, 134. Moving on to, what do we want? Yeah, let's move on to SPY. It's going to be a short episode today, where we, surprise, surprise, actually have a downward movement. So might turn out this might actually turn out as one of the cases where I got it wrong. We'll have to keep an eye on it. So you can check out yesterday's episode, but visually this looked like 1, 2, 3, 4, 5, which is still possible. But the moment we break the low here at 577.55, that flies out, or that idea flies out of the window. Well, actually, not even then. If we break the low here, it would fly out of the window. So at 576.57, so if we break the low here, then the idea flies out of the window, because otherwise it would be 1, 2, 3, 4, and then we get wave 5. Overall, we're gonna have to zoom out here a little bit to get a bigger picture, which is obviously super crowded and not very helpful. Might have been looking too close, so it's possible that we are indeed. I know there's a lot of things on the chart here, and we probably will have to redo our labeling just so that all of this makes sense. I guess that's the typical forecasting chart, but you know, like we add things, then we zoom in, we add more things, and when we zoom out, we have a huge mess here on our hands. Now, if we get rid of all of that, we could simply assume that right now we actually are, maybe I missed that point as we went, but that right now we actually are looking at a 1, 2, 3, 4, 5, and are currently forming the retracement that should take us down to 567.30. So this might be ABC. So this would be somehow wave 1, ABC, and then we would get our, not wave 1, but wave A, wave B, wave C. And if we check the 161.8 pip, we get an acceptable overlap with the 38.2 retracement. So it's possible that we actually get a strong move down the next couple of days into this area here to finish the correction of this entire movement. Somehow originally it looked like we might only be retracing this part here, if I'm not mistaken. So let's zoom that a little back, yeah, and actually remove this for now. So where we basically retraced almost 61.8% here, making it possible that we are going up from here already. This option, as I said, still on the table. Only if we break the low that we had here at 576.57, would it become would it become an invalid labeling. But until that happens, we also still have to consider that it could play out like this, which means we could have a bigger retracement, where we would expect the retracement to end here, but potentially it could go obviously a little further. So right now, probably not the worst idea to stay out of SPY, or if you have a position, either hedge it by, so like kind of like going short along with your long position, so that basically you freeze the current price, and once we reach the turnaround point, you can take the profit on the short position and then benefit on the next move up, or do whatever you will. I mean, it's your money at the end of the day. I'm just saying that based on the zoom in that we had, it looks like I mislabeled here a little bit. So, which means this would potentially be 1, 2, 3, 4, and an extended fifth wave, which actually brings the potential, makes it even worse, because that means we could also be correcting this here right now. So if that would be 1, 2, 3, 4, and then 1, 2, 3, 4, 5 for an extended fifth wave, then we could potentially be correcting this, and we would expect to reach at least the 554, in which case this would be somehow 1, 2, then we get a strong third wave, 4, 5, A, B, C, and then we get another push down at least. So yeah, so SPY, a little bit of uncertainty here right now, unless we see a clean turnaround ideally before we fall lower than 577.55, but at least before we fall lower than 576.57. And with that, we can move on to the Nasdaq, which probably is going to show, no, not something similar. So we had our ABC turnaround pattern here, and we got another push up. Now the question is, we don't want to move too close, but yeah, it's possible that here we're not looking at the futures market, so we're missing the overnight data. It's possible that here we already completed 5 waves. It's also possible that this is only wave 1, 2, and 3. Either way, so there's the possibility that the current retracement here will be an ABC, in which case we would expect, if we look at it, we would expect the Nasdaq in short term to fall maybe to the 50% retracement at 20,240 before we then potentially get to see the next wave up. Now, visually, this here is a clear ABC pattern, so I would expect that we get to see another 5 waves up. But again, the point is, it's possible that here right now we finished wave 1, we are about to get wave 2 downwards to the 50% retracement. And then from there, we would see the next upwards movement. That would be my current assessment. And with that, we actually finished today's stream in probably almost record time. I hope you were able to take something away from this. Overall, there are right now, there are a few plays that we saw, but again, I mean, in my portfolio, as you know, most of our funds are tied to existing positions. So while there is some excess liquidity, it's not, I don't want to use that for just random plays. I'm just going to keep writing my covered calls every week until my GameStop shares get called away, and I'm going to enjoy the option premium no matter how much or little it is in the meantime. And we'll keep an eye on the market to see potentially profitable smaller plays that we could make. Right now there's a little bit of uncertainty in some of the assets we looked at. So where we have the overall labeling that would tell us, okay, we should still go up, but where the closer look reveals that at least short term there's room for further downward movement, or that we could be correcting a bigger pattern. The one thing that I think might be, or from the things we looked at today, I think the nicest one is probably the Nasdaq. Sorry. I'm human. I'm sorry. Yeah. The Nasdaq, because while there is intermediate downward movement possible, and we might even fall another 60 points, which is not that much, to finish an ABC pattern. So circling back for one last second, if we were to enter here right now, then we could place our stop loss down here, which is around 300 points far away, which is not too far. And ideally, we would actually have our entries here at the 38.2 retracement and then more at the 50% retracement, and maybe a little bit of an entry left at the 61.8 retracement. So our risk is clearly defined and not too big. Whereas if this is indeed already the first wave, second wave, then the third wave that follows should be bigger. So in terms of overall movement, so it should, I mean, this movement here was 500 points, so we probably should look at a 1,000-point upward movement. Obviously not in a day or in a 2 days, but over maybe a week or two, or maybe a week to 3 weeks should then take us further up here. Now again, as said, that's it. Don't forget, like, subscribe, enable notifications, and with that, I'm going to wish you a pleasant rest of the day, and then see you all tomorrow around 5 minutes before market open for another episode of Daily Market Mastery. Till then, bye-bye.